Hey, what's going on, Turo host? This is DL Harris. Um, I've been reading a couple of posts in the group discussing the so-called Hummer tax deduction and how Turo hosts can take advantage of it. So besides being a Turo host myself, I'm actually an Intuit certified tax professional as well as a fleet consultant. And so I put together just a little short video to discuss or talk about what the Hummer tax actually is, and if you can purchase your vehicles in their business name or personal name, and just a few other things that you might want to consider before taking this deduction. Okay, so first of all, you should always talk to an experienced tax professional, and at the very least, have them review what you're attempting to do. So the Section 179 deduction has been around for decades and mostly known as the Hummer tax deduction, which was also created, to encourage Americans to buy huge SUVs and trucks. So it allows a 100% deduction for certain vehicles that weigh over 6,000 pounds. So the typical scenario would be for business owners who would purchase large vehicles toward the end of the year after anticipating a large tax bill from the profits that they made in that particular year. They would make the purchase before December 31st, which would allow them to take the deduction on the tax year to cut their taxes or reduce their taxes, or just completely wipe them out for that particular tax year. Now, every situation is different, and depending on how you use this strategy and how it's applied, it could have intended and unintended consequences. So you have to plan pretty carefully for this, depending on how you are running your business or operating your business. Now, you can purchase a vehicle under your personal name and still be able to write it off. But when it comes down to deciding whether or not to purchase the vehicle in the business or the personal name, you're just going to weigh your options, because again, it depends on the situation and your intent. But the IRS generally doesn't care how you purchase the vehicle. They only care how you use it. So another consideration is that this year, 2022, this tax year upcoming, will be the last year to write your vehicle off for 100%. In 2023, you can write it off at 80%. In 2024, you can write it off at 60%. In 2025, you can write it off at 40%. In 2026, you can write it off at 20%. And in 2027, of course, it's gone. But here's a really cool thing. Of course, you can still use this strategy without having to put any cash up front. That's right. You can finance at 0% down and still write off the entire vehicle. So if this information has been helpful to you, you want to learn more, just like it. Just like the video, tag it. Just like the video, tag a friend. And be sure to make a comment about anything else that you'd like to hear about. Or you can just hit me up in the DMs and I'll try to get back to you as soon as I can. But be safe out there and take care.